Hello friends, now let's understand why the forward contracts are used extensively for hedging the risk. As we know, forwards are one of the oldest derivative products that came into existence almost 1,000 years back. These products came into existence so that the traders or the producers as well as the consumers can manage the risk of non-availability of the product or the market or the price fluctuations in the future date. Most of the forward contracts are in the nature of genuine hedging contracts. That is, both the counterparties want the deal to be fulfilled as per the terms and conditions. For example, if the forward contract is for sale of bauxite to an aluminum manufacturing company, the mining company wants to produce and deliver the bauxite on the agreed date, whereas the company producing aluminum wants that bauxite to be delivered at a particular location on that particular date so that they can manufacture aluminum. So many of them are in the nature of genuine hedging contracts. Compared to this, lot of volume on the exchanges for futures is in the nature of speculation and arbitrage, because the speculators and arbitrageurs prefer futures contract over forward contracts because they are highly liquid and the requirements of margin are less and brokerage or transaction costs are also less. So now let's understand some of the purposes of hedging using the forward contracts. The number one purpose of the hedging using the forward contracts is to avoid the risk of price fluctuations in the spot market. Spot or cash market is the market where the delivery as well as settlement is made immediately or maybe in next few days. Now, assume you are relying upon the spot market to purchase something. Let's say you are a producer of bread and you are relying upon the spot market to buy wheat and then produce bread. In that case, if the price of wheat goes up substantially, your cost will increase while you may not be able to pass on the increase to your consumers. The bread price cannot be changed on a day-to-day basis. Therefore, you have a lot of risk in the spot market. Whereas if you enter into contracts right now for, let's say, wheat to be bought in future, you can agree on a price right now and the market fluctuation in the prices of wheat will not impact you adversely. So, fundamental purpose of hedging using forwards is managing the risk from the fluctuation in the price of the underlying asset in the spot market. The second purpose of the forward contracts and futures contract for hedging the risk is to make sure that the producer or the supplier is able to recover the carrying cost of carrying the goods. The carrying costs comprise of various costs. For example, the cost of storage, the cost of insurance, the cost of safekeeping, for example, against theft, and so on and so forth. Now, if you want somebody to supply you something in future, that person may have to carry that stock for some time, let's say for 2 months, in which case there are carrying costs involved. If you enter into a forward contract, those prices can be or those costs can be incorporated as a part of the price, and therefore sometimes forward contracts are preferred rather than the spot contracts. Because of this, typically we observe that the future prices are higher than the current or spot prices unless there is an expectation in the market that the prices will go down in the future. The third purpose of entering into hedge using forward contracts is to manage it as a operational hedging. For example, if you are entering into a contract today for future, there may be a higher liquidity of the available contracts than, let's say, in the spot market. Today, in the spot market, the commodity may not be available. So when you enter into a contract in advance, the market knows the expectation and the products are typically available in the future because producers have got enough time to produce and store the product and make it available at that point in time. This is called operational hedging. So operational hedging is one of the key purposes behind hedging using the forward contracts. One core purpose behind the forward contracts is the selective or discretionary hedging of the risk. For example, if I am a farmer who is producing, let's say, 200 metric tons of sugarcane, I may only enter into 100 tons of sale of my sugarcane in future when it is going to get ready with, let's say, a sugar mill. Now, in that case, I am keeping my another 100 tons of produce available for sale in the spot market. So what I am doing is, at my own discretion, I am hedging my risk to the extent of only 100 tons, and rest of the 100 I am speculating. If the price goes up, I'll make the profit. If the price goes down, I'll make the loss. So one of the purposes behind entering into forwards and futures contract is basically to selectively or partially hedge your risks. One more purpose behind hedging using forwards is called anticipatory hedging. For example, let's say during the summer, the electricity requirement is very high. In that case, the coal production has to be higher to meet the requirements of producing electricity. Now, electricity companies will enter into forward contracts to buy coal during summer. In that case, this is called anticipatory hedging. So, by taking a position in the forward markets, you are hedging your risk of coal price being very high in the summer months. Same way, if you look at it from the suppliers or the producers point of view, what they are doing is that they are anticipating that there will be more requirement of coal during the summer months, and they want to manufacture more coal. Now they need to be assured that their coal production will be taken up by somebody. That is the reason they are entering into a forward contract. This is called anticipatory hedging using forward contracts. I hope you have understood different purposes for which hedging is done using forward contracts. This will help you identify the right kind of derivative instrument to use and manage your risk better. I hope you found this video interesting and useful. If yes, please do like this video, and if you have any questions, please put them in the comment box so that I can answer your questions. Thank you very much and cheers.